All right, cool. So let's get into it. If this is your first session on Tuesdays, what we do is we go through charts. We have 5 pairs that we run through. Um, doesn't mean we're going to get through all of them. Sometimes we get sidetracked and we go down the rabbit hole into to certain topics, like we did a couple of weeks ago with logical areas and things of that nature. Um, we apply the concepts in real time that we teach in this community, and we use the bulletproof confirmation checklist as the backbone, which is also available to you in the 7-figure business model. So we just run through the pairs and we just identify things, top-down analysis, break things out, what we can anticipate, what we're looking for, all that good stuff. We never get sidetracked. Yeah, sometimes it happens. All right, I'm gonna pull up my screen now. Give me 2 seconds. So we got a couple of first timers in here. Welcome, welcome. Let's see. I'm gonna pull this up now. Give me 2 seconds. Let's just pull this down. Just use this one. And let me just get the chat back up so I can see what everybody's saying. What I do recommend, if this is your first session, there is a Q&A section in the Zoom. So if you do have questions, it would be easier to go into that section to ask. That way it's presented to me. You won't see it. It's presented to me in another separate box versus in the chat, which it's really easy for it to just scroll up and for me to miss it. That way I just won't miss any questions that are being asked. So feel free as we're going along. If I'm talking about something and you don't understand it and you want me to explain it further, feel free to ask. Closed mouth does not get fed. There's no stupid questions here. We all have the same goals, right? We're trying to be students of the game. We're trying to learn, grow, and transform, and hit our goals as a trader, whatever those goals may be. So don't be, afraid to ask any type of question, regardless of how stupid you may think it may make you feel, or if you think it's a bad question, whatever it is, just ask questions. I highly encourage that. So you got the whole Q&A section to see that. And honestly, when you use that, the only person who's going to see who asked the question is me. So, if that helps. So, I posted gold today in the mentor chart section just because there were a couple of things I wanted to identify, and I wanted to use that as the preface for what we're going to talk about today. A couple of people have already brought it up, and they're talking about how price has been kind of super choppy and consolidating, and structure might not be, making sense, right? So when I see stuff like that happening, and I'm seeing it happening with gold, right? Structure is just one of those things that on gold can send you kind of crazy right now, because there's so many different things that are providing conflicting information. So when I see stuff like that, I kind of want to go back to those questions that are available to you in the cheat sheet section, which are basically just a list of questions that you can pull up a chart and run through these questions, which will help you narrow down what you're looking at, what you're looking for, what you can anticipate, even before you get to the bulletproof confirmation checklist, right? So and what I mean by that, right? If we look at gold, right? And let me shut the sessions off here. Right, if you look at gold, what would you say it is on the monthly? Structurally, all we're talking right now is structure. Yeah, I'm sure most of you are going to say uptrend, bullish, right? We can obviously see price has been climbing, right? If we go to a weekly, what's the structure? I'm just trying to pull up those questions too so we can have them. So some people are saying bearish, some people say ranging, bullish, right? So the way I would look at it is like, we're obviously bullish here, and it looks like we had some type of expansion creating inefficient price action. And then this right here was what? It's kind of like a big flag rebalancing this expansion, right? And we can see where it came down to, right? And then we started to push up. Almost looks like an expansion, right? Looks like it could be pulling down a little bit, right? So if we go to a daily, what's the structure? Or what is price doing now? Being one of the questions. Yeah, rebalancing, right? Like I would maybe consider this more bearish, right? Because we had price pushing up, pushing up, pushing up. And if we look, right, if I go back to the weekly really quickly, the last expansion that we had, right, and this structure was this push down that came into this candle, and price came back up and kind of give a real strong push down, looking like it could come for some lower downside targets, right? We have a couple significant ones, right? So if we look at the daily, we had price pushing back up into a logical area, and it just plummeted. This is our expansion here. This is the most recent expansion here. And this is what the summer's been. Look at all these daily candles, right? So this is, in my opinion, a rebalance, because this could be, if we take this expansion here down to here, right, we would ultimately want to see maybe this and rebalance and come back up here, right? So we're still probably 50%, or now we came up probably to the 50% of this expansion. Right, here's the expansion. So we came right up to the 50% area of that expansion, and now we're lower, right? So we're definitely not in the kill zone for this expansion, right? So it's super, super choppy. We kind of have like a little double bottom here, flagging, but seems like it's been going for days equals, right? I mean, you can see this is the summer price action. I mean, look at this, especially in here, right? So what I marked up today and what I was kind of showing you, when you see stuff like this, right? Because this looks bearish. And then if we go down to, let's say, like the 8 hour, we'll go the line chart, bearish or bullish? Or maybe like the 4 hour. Yeah, bearish, right? But here's a little trick question. What is this? If we're looking at this current structure here, right, and we're looking at bullish, right, or excuse me, bearish, this here on a daily, what could this potentially be on a daily here? And I'm just kind of showing you what I'm talking about, where there's a lot of conflicting information and what you can do. Yeah, we know it's a flag, but if you're looking at the daily, right, we have the daily push down, and now we have this double bottom right here, this W pattern, and we have a price pushing up. What is this potentially? And what is this potentially on a daily? Look, I'll flick back over. What would that be? Right? So technically, right, like on a daily from this expansion point, and if you can see where this was also happening, right, what do we have here? Oops. We got this big break retest level here. Just like we have one here. Yeah, higher high and potentially a higher low. So like when you're talking about this daily structure, just kind of honing in on this after that expansion, we're talking about a potential higher low here that could potentially come up. But right, we're bearish on this. We go to 4 hour, we're bearish, right? So there's a lot of things that are kind of conflicting, right? And if we go down to, let's check out maybe, you know, the 1 hour, bearish or bullish? Bearish. What else? Bearish. Bearish, but choppy. Right? So I think we can all agree, right? Or no, maybe somebody's can, read this, maybe better than I can. I'm sure a lot of you can. But what can we do here when it's a bunch of conflicting information like this, especially in the summertime? Like, look at this price action. Since we got this big drop, this is all we've seen really this summer. It's been very choppy, very difficult to read, especially when it's like one of the two pairs that I trade consistently. Yeah, we can wait, but like what can we do though? Yeah, we can ask ourselves, what is price doing now? But if we look at the questions, right? Planning scenario, but how can we scenario? Think of the questions, right? What is market structure showing you, right? Higher time frame down to lower. What is price doing now? We kind of already went over those two. Then the third question, what are retail traders doing? Yeah, Christian. Right? So that kind of goes also hand in hand, like where's the money? Like where's the liquidity? And that's what I posted today. So like when I look at this stuff and things are super choppy like this, there's a lot of conflicting information, right? Because if we're looking at a 4 hour and I just flick over the line chart, just looking at this structure, it may suggest, okay, this could be coming down, but you also have to keep in mind, if this is the bottom of an expansion on the daily and a potential rebalance, and we add this push up here, right? We got to be careful of selling because there's a couple areas that we can get jammed up, right? Which why we want to pay attention to what retail traders are doing, and for the fact that if this is going to be a rebalance, there's going to be a higher low at some point. So selling can be limited. So what I would want to do here, and what I kind of showed you in the mentor chart section, is I kind of got an idea of what retail traders are doing. And how can I do that? Let's say this is like your first time ever trading and you don't have retail experience. And not to mention retail traders, there's so many different strategies. They're all kind of based on the same thing, right? Support, resistance, indicators, and trend lines, and identifying certain patterns, whatnot, right? We can go over to TradingView, right, Christian? So that's what I did this morning, right? And I had an idea of what most people were going to be doing, right? If we look at this pattern, straight break retest level, right? We can see resistance here. There was a lot of resistance here. Price broke through it. And now, right, I'm sure you've heard this expression many times if you have experience trading, right? That ceiling is now the floor. And this is used as opportunity. So that's one way that can be viewed. People might be viewing it this way, trend line. People might be viewing it this way, another trend line. This here, trend line with this support, that would entice buyers. This trend line here, right, selling off the trend line, that would entice sellers. This support level entice buyers. And then we also have this. Left shoulder, head, right shoulder. We have a head and shoulders pattern. And how do people trade head and shoulders? Or how are people taught how to trade head and shoulders? Right? This would be a straight up head and shoulders pattern, which would, and this one, not being inverted, it would suggest potential shorts, but you would look for the neckline to break, meaning retail traders are doing one of two things. They're either doing sell stops here, right? So if it breaks this and breaks out, right, and comes through this support level, they're catching the trade, or they'll wait for the break and then look for that resistance, or excuse me, that support to become resistance again, and they would look for shorts. Same thing that would work with this trend line, right? If it breaks the trend line, people would look for break retests. So how can we use this information to our advantage? Understanding this, like what, and again, if you aren't sure what retail traders are doing, just go to TradingView and you can just type in the pair you're looking at, right? So if I type in gold, we'll probably see all of the things that I just marked up. Let me see if I can get to the newest ones, because these are old. I hate all these changes they're making on TradingView. It's driving me nuts. I did it earlier and I don't know how to do it. You can set a pending for sell and a buy with a proper stop. Think of what we did on CAD JPY. Yeah, they used to have a button right here that would show the newest ones. Man, I hate what they're doing here with TradingView. Maybe if I click that. There we go. There we go. Newest. Okay, so look. Right here are both the trend lines that we drew. Right, she's looking for shorts. Here is two of the trend line, or one. Oops. Sorry. Right, he's got the break retest level. And he's got this trend line here. So it looks like he's looking for buys. He's looking for buys, right? He's got it pretty close to what we're looking at. They're looking for that support to break. A lot of these are looking like buys. Here's the head and shoulders. He's got the support. He's got the two shoulders and then the head, looking for the break retest, right? A lot of people look like they're favoring the buy side here. So what does that tell us right there? What does that tell us right there? Most of them look like this. I'd be looking for price to take the lows, then shoot up. That's basically what I was anticipating. Attack the buy side liquidity. Because think about it. What did we identify structurally? That this was a daily push to the downside, right? Daily expansion, and that we'd want to see price come back up, finish rebalancing it, and potentially maybe come back up here and make this a higher low here, this being a higher high, and get that higher high and finish pushing up here. And then we can see what we got going on when we get up there, right? If this is going to happen, these areas here, like the support resistance level, that's not what's going to drive price. Retail traders, and probably a lot of you, I know I was, they're taught to identify these patterns and levels for opportunity. But we know what's taking place there, right? A lot of people are probably already looking for buys. Every time it touches that support, they're probably looking for buys. Then you probably got the people that are probably a little bit more patient, and they're going to look for what? They're going to look for maybe a breakout, and they're going to look for, maybe a retest and something like that off of an invisible line, right? Invisible levels. They fail to recognize what's happening above these highs and above those highs and below these levels here, above this level here. What's happening at these levels? If we got a bunch of buyers coming in off of this support, apparently 86% are buying. Oh yeah, you can see the percentages on there too somewhere, or used to show. So like, think of this, and this is how you can kind of piece together the puzzle and figure out the order flow of things that are happening here. Structurally, with what we're seeing here on the daily, that this could be potential higher high here, potential higher low. We're looking for more upside to rebalance this expansion and come up to that daily. What would make sense? Like, remember, we got to identify what's the catalyst. Price isn't just going to come to a support level and go. What is the blood or equivalent to the blood that's running through our veins that keeps us like alive and moving and functioning? Right? We need blood that goes to our brain so that we can think, right? Liquidity, absolutely. Liquidity. What would make sense here? Like all the questions that we've answered so far. What are retail traders doing? What is price doing now? What is market structure telling us? Where is smart money and drawdown? Right? Do we have clear targets? Right? We have a lot of imbalance here that was created that we need to rebalance. We have this high up here. We have top side. FU on break retest. That's what I would love to see. And that's what that's what I'm anticipating here. Because we know if we get this, we already know that there's a lot of people coming in here off of this. Probably every touch that it comes down right now, there's probably people getting in. So we know that there's liquidity here. There's no doubt about that. Liquidity is building here. Just like, and this is what we call buy side liquidity. Right here off the trend line, right here off the trend line, and right here off the trend line, that's sell side liquidity. That's liquidity coming in from people shorting. So if we're going to see this come up, and again, this is just stacking probabilities. We don't know if this is going to happen. Anything can happen. But piecing these questions together and then following the confirmation checklist, the confirmation checklist is going to happen after we ask ourselves these questions, because what we need for entry and all that good stuff and the confirmation for this hasn't happened yet. We need other things to happen first, like this. What would this do if we saw price drive down into this pool of liquidity that's generating here? What would that do? Two things. Activate orders, one. And stop hunt. It would be taking buyers out and it would be enticing sellers in, right? So look, people are putting their stop losses under here if they're buying this level here. This is happening as we speak. So if we get this, it's taking out these. And then if price starts pushing up like this, one, we already know, people are going to put sell stops on this level. So we probably have sellers already coming in, and we have probably stop losses going above the last significant high or low. That's just what people are taught. So we would have more sell side liquidity here. Then we have the break retest levels that would, traders that would start coming in when this pulls back. Well, that's what we don't know if it will create a signature. Like, that's what we're anticipating. Like, in order for price to come up here, it needs to generate, like when I see big liquidity like this, a big pool of liquidity, and we know this is because this is a break retest level that's been happening for weeks, right? Let me throw the week thing on here. Each yellow strip is a week. So 1, 2, well, we're in this current week. So 1, 2, 3, 4, 5, 6, right? Towards the tail end of this. So close to 7 weeks, we've been down in this range, and it started creating this level, right? So there's a lot of money that's going to be playing around these levels here. If it's going to come up here, right, that's a, sorry, here, let me get these off here, right? That's a big indication that there could be, to me, I just look at that like this is like a breeding ground for manipulation. Like, why would they be enticing all of these people to come in so soon? It just tells me that there's a trap in the making here, and that we just need to be patient and wait for things to happen. Like, we don't need to force anything here. Buying here on a level like this is risky. Selling, there could be moves, but you'd want to probably be very cautious of price coming into these levels. Because what I would want to see is price come in, trigger these sell stops, trigger these break retest levels, and also grab all the stops of people that are already buying, and then see something like this. And what would that give us? That would give us what? A break of structure, signature pattern, right? Because we would have an FU candle in here, right? Price slamming down, and it'll be the last candle. And maybe we can get like a nice engulfing candle, a nice expansion, breaking structure. And then what do we do? That right there is when you look for buys, because now it's going to tell you the order because it just took out all the buy side liquidity. So what are the targets? Sell side liquidity is the only thing left. And that'd be a good indication that this is going to come up and run on this high, rebalance this, right, from these big moves, and then probably make its way up, potentially up to that daily candle where it was the start of the expansion. That's how you can piece things together when a market might seem like it doesn't know what it wants to do. Tomorrow, hopefully tomorrow, FOMC. And that's also a good point too, because when you see stuff like this setting up, typically it's major events like that. And typically FOMC with gold, we've been seeing some movement. So like typically that, like when you see the buildup of stuff like this, and then you have a big news event like that, this is the catalyst that's building, and that's the excuse. It's like a cause and effect type of deal. So if we saw that, you know 100% what we need to do. Push down, attack this liquidity, come up here, and especially if we see it take this liquidity and we see a strong push away, like it comes into this and it has no business staying here. It just wants to immediately get away aggressively and show a nice engulfing candle. And that's usually when you're going to see the break, and that's the footprint. That's also telling us, okay, it's time to go, right? Now we can see this start to push, attack all of these sell side targets, and potentially start really making its way up. And then what does that also tell us? If we see something like this, what does that also tell us? If we see all this set up here, FU candle, let's say we get a nice engulfing candle, typically that will happen. If we get a nice strong push away, break of structure, and then we get this pullback here, and we get this right here. What is that a continue? What is that the possibility of happening now? Time to make a higher high, but what is that? An expansion, right? In an expansion, that's typically when a lot of the real opportunities are present, because you have more direction, you have better price action, because expansions versus rebalancing and pullbacks, it's completely different characteristics. Rebalance and setups for manipulation and consolidation and ranging, whatever you want to call it, it's very choppy price action. It's very difficult to trade, even for professional seasoned traders. Expansions are where a lot of the money can be made. So does it make sense here? Does everything I just talked about and how we kind of came up with this? Now, we don't know if this has happened. And if it happens, it happens. Like that's great. Like that's what, if we're going to see this come up and attack this sell side liquidity and maybe potentially come up higher and make a higher high and give us that expansion, right? I just would have a hard time seeing it happen off of this level. I would probably want to see this, because that will give us a signature pattern in this logical area here. Right? FU, break a structure, all that good stuff. So like you see stuff like this, you pull up a pair and you ask yourselves these questions. Then once we see this is like what we're anticipating. This is what we're forecasting, right? What we want to see, because we've painted a clear picture in our head of what we want to see. When we get this, that's when we can start completing the bulletproof confirmation checklist. And then we'll have our new expansion after or that little break of structure. That's what we can throw the fibs on. That's what we can use to identify. I'm looking over here because I got my checklist here, right? That's when we can identify the FU that is capturing liquidity coupled with an engulfing candle, price action following FU candle, break structure, creating a lower low or a higher high. In this example, a little expansion, draw the fibs on that new expansion after breaking structure. Look to see if the fib or the FU candle aligns with the Fibonacci kill zone, the 77.1 to the 886. Look for imbalance or equal lows or equal highs above or below entry, yada, yada, yada. Pullback doesn't necessarily have to have an engulfing candle, not mandatory, but right, that's when we can really start plugging in our targets, because if you don't know where price is going, you have no business being in a trade. It doesn't matter how crystal clear a setup is. We talked about this last Thursday. There was a beautiful flag pattern on the data that we were looking at. If you have no targets, it doesn't matter how pretty the setup is. You have no business being in that trade, because if the price doesn't have a place to go, the setup and the entry, it's really useless, that pattern, right? So here we can plug in all that entry criteria, and we already know we have targets if we're going to get something like this. You talk about summer price action, what season is the best? Maybe this is subject for another video. Time and price on a yearly time frame. Yeah, we can probably get into that in another video. I want to kind of stick to the script on this one. I typically like right after summer, like right when we get out of summer, tail end of summer, usually things pick up. Winters can be touch and go, so it's kind of like in that little threshold there. That's usually when I perform the best, right after summer. That's usually when my results are the best. How many pairs do you consistently trade? Two. Unless like one of my trading partners brings something to my attention. I manage an account. My primary investor is also a trader. I trade with him. I'll answer these questions that are relevant to what we're talking about here, and then anything else will come back. What do you mean where smart money is in drawdown? That might also be another topic for if you watch the videos in the trading model yet. I just want to, I don't want to get too sidetracked on what we're talking about today, and some of those things that can kind of lead us down a rabbit hole, because it's not like a 2-second thing to really get into. Okay, so since we know what we are looking for and we know FOMC is tomorrow, at what time frames would you be looking for it to happen? Would you just put an alert somewhere specifically? So that's a good question. Okay, so like what time frame we identifying this on? And it's also kind of hard to say, right? So like, but let me we're on a 4-hour time frame, right? So if we have some 4-hour structure that's created, we're going to need 4-hour 1-hour break of structure, right? All of these wicks that are coming down into this area and bouncing away, let's just use this for an example. Let's just use this for an example here, because this technically was also an FU, right? This took out these lows and previous week low here, right? And then strong push away. So let's say we get something like this on FOMC. Well, what do we do? Because that's a wick. We can't do anything with that, right? What do? We start dropping time frames, right? So like, let's say I drop to the 2-hour. Still a lot of wick, can't really make anything out yet, right? I want to find an FU candle, and what we're trying to do is ideally get to the time frame where we can see a clear last down candle with an engulfing candle and not too much wick. I don't know if this is going to show it, but this is just kind of an example. Like, let's say we get some fast price action that kind of pierces this area of liquidity and then goes. All right, so let's drop another one. Right, so that's kind of what we want to see, but there's still a lot of wick there, right? So we can drop down another one. Go to 30. Still kind of wicky, right? So like that's basically what we want to do, right? Like price is price no matter what time frame you look at it. Like right now, price is 1802, regardless if I look at the 4-hour daily, weekly, monthly, or whatever. So we know where the 4-hour structure is. So we know regardless of where price shoots down and shoots up, we know what it has to break. And after that happens, it's just a matter of how price looks. Like we can't know the time frame yet because we don't know what the price action looks. If it's super aggressive like this and pushes away and it's a wicky 4-hour candle like this, all we do is hammer down until we can actually see something clear, right? Where ideally we get a nice, FU candle, not too much wick, nice engulfing candle, and break of structure. So am I still with you guys? Can you guys still hear me? Because my trading view just froze for some reason. All right, one sec. Let me try refreshing this. All my other screens are good. All right, so we didn't lose anything. So like, does that kind of make sense? Like, I mean, we can probably look at it here, right? Like that's kind of like, let's just see, because this was an FU candle too. That's why I'm pointing this out. You can see how it kind of attacked all these lows, right? You can see this one here attacked this low here, all these lows. There was some equal lows in here, and then it went, right? So like, let's say something like that happened, right? 4 hour, that's obviously not going to help us. We're not going to get an entry there. We can drop, right? Look what you get there. You can see how it's clear, slam down, strong engulfing candle, right? Like that's an FU candle. So we can drop down and see if this comes down a little bit, right? Little wick there, 30-minute, not so much. So if that looks the cleanest, so what can we do here? We can see it maybe if there's imbalance inside this candle. Maybe we can take like, I'd probably not take this candle because it'd probably be too big. I'd probably look for the 50%. There's a number of ways you can do it, but you ultimately want to identify structure points that you want to break. So like I said, like right now, it doesn't matter what time frame we look at gold on, price is 1800 right now. We know where structure is that has to break, right? We can just go to a line chart and see, here's the last swing point right here. Here's our last swing high to our swing low. That's our 4-hour structure that needs to break. That's at 1808.67. So we know price has to break that to break structure. Doesn't matter what it looks like. We just need price to close above that. That's our break. So if we got something that looks like this, oops, right? Or it doesn't have to be that high. You get my point. Then it's just a matter of what time frame is the clearest that we can find a nice FU for an entry there. And then we just stack confluence, right? So take that other example that we just looked at on the gold with the 1 hour candle, but that 1 hour candle is real big. So let's say price slams down like this, and then we get price that pushes up like this. Right? And then we get another candle like here. Right? Here's our FU candle, and here's our engulfing candle, and then followed by a nice second candle giving us that expansion, giving us that break. If this candle is too high, there's a couple things that we can do. First and foremost, what do we want to do? Like, let's say price is like this, right? And we got our FU candle, and we broke structure here, right? And we took out these lows just like, we just showed on gold. Yeah, we want to throw the fibs on there first. Let's measure the swing. Swing low. Well, I'll do this one first just because it's already in the 50%. So first we can take the 50% of this candle, and we can take the top of it. Now we can switch this back over to the regular fibs, and we can swing it up there. Which entry on that 1 hour candle is in our kill zone? Our kill zone being the 71 to the 886. Yeah, the 50%. So probably want to take this off. The majority of the volume is going to be in the 50% of these candles. That's why we're doing that. So we can, this one would be in the kill zone, right? And that would give us our entry. That's how I do it. Another thing that I'm doing too is I'm still paying attention to this because like I don't take trades unless they're in the kill zone. If price were to come down, like I still mark up the top of the 1 hour candle like this, and I might just make it like dotted or whatever like that. If price wants to, pull back and come short of where I'm looking and short of my kill zone, and it starts to push up, right? You're going to have another opportunity here, right? You might get a signature pattern there. You could wait. There's so many different ways that you can enter. You can just wait for another expansion, higher high, and then you have the same thing, a new down candle, right? And look for the same thing, right? So, but that's how I would, that's kind of a long way of answering that question. but that's ultimately what I would look for. So it's like, I don't know what time frame it's going to be clearest on. We just don't know, but I know points of structure that I need to break, and whatever price looks like, we'll see it. If it's wicky, you just got to drop down. You on a 4-hour setup, we're probably going to see this anywhere between the 15-minute, 30-minute, 1-hour time frame. 4-hour, it's probably going to look wicky. If it jams into here and pushes away, 4-hour candle, it takes 4 hours to close, and based on when FOMC happens, there would be 2 hours left on that candle. So we'd probably have to hammer down. Yeah, it would be a 2x2 situation. Yeah, so there's so many ways. I know we went really long into this, kind of hammering into gold, but I think there's quite a few lessons that can be learned from this, especially because most pairs are looking pretty choppy, and structure almost hasn't been playing a role. So that's when you really just have to kind of shift your perspective, and that's what I did today on gold. I'm trying to figure out really, where's all the liquidity coming, and what order flow would make sense that lines up with the structure here being, potentially, a rebalance here, potential daily higher high here, potential daily higher low here. What would make sense if this data that we're seeing and how retail traders are coming in off this support and these head and shoulders and these trend lines? This could be a catalyst here with this liquidity pool here for giving us exactly what we're looking for to come up and rebalance and target this sell side liquidity that's building up on all of these highs right here. And then all the imbalance, and then come back up and play out that daily candle. Does that make sense? Everybody following along? I don't know if we're going to get time to get into other pairs today because we're very close to the top of the hour. And I apologize, but sometimes when we hammer into pairs like this, it's more valuable than me just speeding through, because I don't think any pair right now really has anything that's, I think they're all similar to what we would have had to do here. I don't think there's anything on there that we would be able to just start hammering through the bulletproof confirmation checklist, because I looked at all of them. Confirming the direction of the market. Yeah, I mean, that's the most important thing. Like, you guys will see it. It's really like when you're testing stage 1, stage 2, and you're trying to figure out, your setups and the key thing is like that I would really focus on is trying to determine where price is going. When you can determine where price is going and like what's the agenda, like what's happening, like when we like kind of just how we depicted gold here, right? We're not guessing here. We're anticipating. We're looking at a picture that we're very familiar with, and we see the picture almost painted. And now it's just about waiting for it to paint. And then we really just want to test where we were anticipating. Kind of like I call it the order flow almost of like what's happening. Like if sell side liquidity starts being attacked first, and then we see a strong expansion down, that would shift. If we see sell side liquidity untouched and we see buy side liquidity attacked and then quickly pierced and then pushed away, we know sell side liquidity is the target, right? So it's going to give you a lot of information. It's basically just kind of putting this together, putting the pieces together of the puzzle, and then just kind of waiting for it to happen and show its hand. And then you can work out, testing what we're doing here, and then test, okay, is price really going to be coming up to these targets? And, because you can work in entries a million different ways. And you see it in the group. Like there's a lot of different people who are successful and who trade different ways, different setups, different time frames, right? There's so many different ways to get into trades. But the most important thing is getting your directional bias with the agenda of like what's happening based on like higher time frames and manipulation and breeding grounds and all that good stuff. So it has to kind of be congruent. If you can get that congruency, then you can work in entries, no problem. There's a million different ways. Like if this comes up here, there's going to be probably 50 different ways to get in it. Not 50 different ways. There's probably going to be 50 minimum different opportunities to get into this trade, because we also know it's probably going to take it, maybe a week. I mean, this pattern here took almost 2 months. So we know coming up there time, and it's going to different opportunities. Just because we might have missed the first one here, just hypothetically speaking, doesn't mean that it's done. It means that your bias was correct, and now we can just start going after targets. This applies to every pair anyway, principles wise. I agree. I agree. Like what we did here is what you need to do. I'm only trading one pair. I've been helping somebody and leaving voice messages, and let me explain why. I recommend and I trade two pairs, and we'll end it on this because I don't think we're going to have time to go through too much more because I have to get right into recording like right after this. Did I freeze for everybody? My VPN's off for a few seconds. I just have a ton of stuff open and recording software and all this stuff, and I just can't close it. So that might be why. But let me answer that question. And I hope this helps a lot of you. Somebody asked me the other day, and it's somebody that I've been working with for a while. And I'll read the question. I'm not going to say their name or anything like that, but I'm going to read their question. It was very similar to what you just asked. I have it right here, so it's not going to take long. Okay, they said, "Hey, Danny, hope you and all the family is well, blah, blah, blah. I took a break from trading and hadn't placed a trade since the end of April. Not really like they didn't want to. It's just because they are playing on the higher time frames, which is recommended at first until you figure things out and you find, the setups that you like to trade and all that good stuff, right? Through backtesting and data collection. And they're trading two pairs, GN and AN, to keep them from pinging and ponging all over the place. Since I am trading on higher time frames still, as I haven't been profitable yet, what should my daily routine be when pulling up the charts realistically that will keep me engaged and not sitting on my hands for weeks at a time, waiting for price action to come to entry? Now, what do you think before I answer? What would you say? Because that's very similar to the person that said, I'm only trading one pair of GN. Is that a good thing? Like what's the first question that I'm going to ask this person who said, I'm only trading one pair of GN? Is that a good thing? What's the first question I'm going to ask them? Does anybody know? Yeah, what stage are you in? If you're in stage 3 and you're in the profitable stage or stage 4 scaling, awesome. You're doing what you're supposed to be doing. Focusing on less. You got your pair. You're trading GN for a reason because it shows like that's your pair. I love GN too. It used to be a pair that I trade. I've made the most money right behind gold on GN. I love GN. If that's you and that's your pair and you understand the characteristics and you understand the price action, because all these pairs have different characteristics and personalities and all that stuff, right? If that's your pair from the data that you collected, awesome. Then just keep doing that. It's a good thing. When is that not a good thing? When is GN trading one pair? It doesn't matter if it's GN or not. When is trading one pair not good? Just like the person that said that they are not profitable, stage 1, in trading two pairs, those two pairs being AN and GN, correlating pairs. Collecting data, right? Because like you can't collect data when you're trading two pairs, right? Because especially when you're trading GN and AN, those are correlating pairs. And if you look at AN and odd New Zealand, right, the two currencies that make up that pair are the two slowest currencies that you can possibly trade, odd and New Zealand, right? Not to mention odd New Zealand and Great Britain, New Zealand, they're both very correlated pairs. So they're probably going to look very, very similar. So you're essentially almost trading like one pair there, right? And you're not going to get much data. And here's the example that I gave her. For this company, EFX, like we have people that market this. We have to because it's the only way to bring new people in and keep the lights on, honestly, because of the retention. But that's neither here nor there. But we have people that come in and do the marketing through paid advertising. They just initially they did 10 to 15 different ads, all running at the same time, all with the same budget. After 2 weeks, they know which ads are doing well and which ones are not doing well. The ones that are not doing well get turned off, and the ones that are doing well get scaled. the reason why they start off doing 10 to 15 is because they're going to collect a ton of data in 2 weeks that would take 1 or 2 ads months and months to collect. Like, think if we only tested 1 or 2 pairs or 1 or 2 ads over 3-4 months, we'll get 4 times as much data doing 10 to 15 ads in 1 or 2 weeks. Does that make sense? So I'm not saying go trade 10, 15 pairs. Like that's not what I'm saying. But I would probably look at 5 to 6, maybe 7 pairs stage 1, because right now you're not trading for profits. You're not trading for money. That's not what you're doing. That's not your goal. And if it is, you're going to get jammed up. When you're trying to trade for that, that's when it doesn't come. You're trading for directional bias. You're testing what you're seeing and learning. Like what we talked about today, you're going to go back and you're going to apply this stuff and you're going to test it. You're going to test your entries. You're going to test your setups. You're going to test your time frames. You're going to test the day of the week. You're going to test the week of the month. You're going to test the time of the year. You're going to test the overlaps and the sessions. I used to trade a lot of Asian session. Why did I trade Asian session all the time? Because that's when I got home from work. I got slaughtered on Asian session. When was the best time for me to trade with my results? Was London, right before I went to work. Most volume and for whatever reason. So I cut that out. I focus on London, right? Like that's all you're doing and recording it all. So you can get a bunch of data. And then you take that data and you comb through it and you look at different patterns and strengths and weaknesses and all the commonalities that are going to appear with our trade journal. That's amazing that Darren and Steve created for us. And it populates all the stats at the bottom, just like you can hook up MyFX Book or FX Blue also to your accounts. And it's going to tell you everything. It's going to tell the pairs that you're not doing well on. It's going to tell you the pairs that you do. It's going to show you the time frames you're doing well with, the time frames you're not. It's going to tell you you're crushing it with signature patterns, flags, you're getting destroyed. So you take all that information and you edit your trade journal, or excuse me, your trade plan. And now you have a new trade plan to apply to the next sample size, the next 20 to 25 trades, or the next month worth of trades. And now you collect new data with the changes of your trade journal. This right here, folks, is how you become a profitable trader. This is how you transfer through the stages of a trader's evolution from ground floor, stage 1, to stage 2, break even, neutral zone, to stage 3, profitable, to stage 4, now you're scaling your business. That is where and how you reach what I call trading nirvana. That's it. That's all you're doing. We weren't testing those 10, 15 ads to try to make money and get a bunch of leads and a bunch of sales. That's not what the purpose of that was, what was taking place there. It was solely to find which ads are going to perform the best for us. And when we do have it, then we smash them with a bigger budget. And now it's about making money and leads or whatever the purpose is. But it wasn't, that testing wasn't about anything else. Figuring out what ads work, which flow worked, which funnel worked, right? All that stuff that those guys do. It's the same for any business. It's the same for email marketing. It's the same for if you own a grocery store or a restaurant or whatever. It's all the same. Everything's data driven. You have to get to know your numbers. If you don't do this, you're just shooting yourself in the foot and you're wasting your time. Simple as that. So, I mean, it's a good question, but it all depends on what stage you're at. If you're in data collection stage, then and GN that's trading one pair. GN's not. It's just going to be a very long process for you because you're not going to get much data. You're probably going to get like 3, 4, 5 trades in a month. Where if you were doing, 5 to 7 pairs, you're going to get 5 to 7 times that most likely, and you're going to have a lot more data to analyze and a lot more data that's going to be populated, automatically in the trade journal that we have that has all this coding and it's going to track everything for you. Like back testing doesn't have to be hard, especially with a journal that's available to you. And if you hook up like FX Blue or MyFX Book, like which basically does the same thing, and you get all these fancy graphs and all that cool stuff, it's going to show you, okay, the majority of your trades that are winners are all sell by market execution. 90% of the trades you lose are buy limits and buy by market execution. Like I know people that can see sell side setups very easy and buy side they just struggle with. Like, but you don't know that until you collect data. Everybody has a different personality. Everybody has a different belief system. Everybody has different risk tolerance. Everybody's going to view the market differently. We can apply these concepts it's going to apply for everybody. It's the foundation, but they're going to be used and viewed differently by every person that is in this community. And you're only going to find out what your strengths and weaknesses are and patterns in your behavior if you're doing this recording and this data collection combined with a market biofeedback. And a market biofeedback is just as important. And most people end up neglecting it. And usually that's just because they aren't aware of the process. But I hope that answers the question, and I hope that also helps a lot of you in here. Like it's really, I mean, that's what trading is, and that's just part of running a trading business. Yeah, we do live trading. The next one is next week. Let me check. The next live trading is August 6th. August 6th is the next live trading session for NFP. Yep, next Friday. Yep. We had a really nice setup last NFP. That gold trade, that was a thing of beauty. You guys remember that trade? That thing was beautiful. 7:30 a.m. Eastern we get on. Yeah, because the event's at 8:30 a.m. Eastern. Like a half hour into New York session. That's when the 8:30 is when the news event is. So we usually get on like an hour before just to kind of prepare and you know, and my trading partners also hop on with us. I was watching some people pass their FTMO from that trade. Yeah, I think Martine and Babs, they passed their challenge with that trade. And I think there was somebody else too. It was an awesome trade. It was a beautiful trade. There's Martina. That was an awesome trade. Yeah, it was a nice trade. I like that happened because I really want, a lot of people were asking about news events, and it just goes to show you like how precise this stuff is and how news events are not really determining direction. It's just kind of like what we talked about today with FOMC. FOMC is not going to determine if price goes up or down. It's just going to be, you know, it's like the cover story. Market manipulation at its finest, for sure, for sure. So just to be respectful of everybody's time, we're 10 past now. Does anybody else have any other questions? Other than that, I think we had a good session today. You guys agree? You guys get value from today's call? I know we didn't get into many pairs, but you know, we kind of went down the rabbit hole, like kind of like what we said we were trying not to do, but sometimes these can lead into the most valuable sessions. So just water. It's just I drink water easier if there's like some flavor to it. So it's I just drink water. I don't drink soda or anything like that. Thanks, Danny. I can now go to sleep. No problem. Have a good night. Good session, Danny. Thanks. We all like rabbit holes. Have fun with the next recording. Don't forget the rest. Yeah. Just so everybody knows, we are on track for EFXU week 2 because I know a lot of people have been asking. That will get released today. I don't know what time, but it will be done today and uploaded. So we'll let you know about that as well. So cool. I don't see any other questions. Let me just make sure. Oh, can Luke or Brooks trade accounts for people if we wanted to? Brooks won't. I mean, honestly, the only person that he's really talking to, I don't want to say the person's name, but it's 8 figures. So it's like, you know, he's just not. He's the one that provides money for me to trade. Luke might. Luke might. I've plugged Luke into accounts. You know, I would rather have somebody in the community have the opportunity. I'm already situated. Brooks is already situated. So, you know, if there's somebody else that can prove, you know, what they're doing is profitable, and, you know, like a Luke or one of the other top traders, you know, and you want to give somebody an opportunity, I mean, I'm all for it. Do your thing. Reach out to them. It's all good with me. But I'm pretty sure Brooks would not. Real question: what does the 2x2 situation mean? It just means, like, you know, when you get a break of structure and there's just a new high, and then you get that pullback, but the structure is not really confirmed bullish yet, right? Or bearish. Like, let's just say we have a series of lower lows and lower highs and prices in a downtrend, and then we get, you know, like, let's just say that, like, gold, it grabs liquidity and then shoots up, and then we're looking for a pullback. All we have is a break, right? There's no real structure. When it comes down and then pushes up and then makes a higher high, now we'll have 2 highs and 2 higher lows. That's 2x2. So it's just more confirmation that, you know, price is going in that direction. Just a suggestion with the journal: you should add a legend saying precisely how to fill the journal entry. Example, when you wrote in the buy sell selection, it has to be buy or sell, not buy or buy is the formula and sell. Okay, so it does, but it's not in Excel. You can't, the coding won't work if you save it as an Excel. Like, you can't save it to your computer. The trade journal will only work properly and show all of the different things and calculate everything and show all the drop down boxes and all that good stuff as a Google Doc. Only a Google Doc. The coding that is used will not work for Excel. It has to be, you go to the Google Doc for the journal and go to file, make a copy, and you have to have a Google account or Gmail account. It's the only way all that stuff will work. All right, so now I think we have all the questions. There's bullish divergence on the 1 hour. How would that play into the current situation? If there's bullish divergence, I mean, that would, you know, if there's divergence basically means that, like, there's a change happening and a cause for investigation. It's not a standalone. It's just one of the confirmations. If you want to use divergence, I mean, I look at divergence periodically, but, you know, we have stuff on divergence, and we'll probably dive more into divergence now. It's just not a topic I can get into now. Can I get someone to look at my trade journal and make sure I'm doing it correctly? Yeah, I mean, I'm sure there would be people willing to help you. I would just drop a message in the group chat and just tag everybody, or better yet, don't tag everybody. Tag either funded traders, or tag moderators, or tag top traders, and somebody, I'm sure, will help you. Hi, Bob. Do you say hi, everybody? Say hi, everyone. They're all saying hi to you. You tired? Okay. You gonna take a nap?
Where are they?
You can't see them. They're all typing right there. You see? They're all saying hi. See? Hi, Emma. Hi, Emma. Hi, Emma. You say hi?
No, I'm too tired.
Oh, you're too tired. Okay, everyone. Well, good session today. We're gonna wrap it up. I gotta put her to bed, so she's too tired to say hi. But I think we got all the questions answered now. Cool. I don't see anything else. So the Google Doc, do you fill it out each month, and will it link to the master? So the master is just something you don't touch. There's yearly stats. It'll link to the yearly stats. And then if you scroll to the bottom, it'll show you all the stats for that month. But the master you don't fill. You just go to the bottom and you'll see all the tabs: January, February, March, all the way to December. Then each year you can just make a new copy of it. So, all right, guys, good session today. I'll see you all Thursday at 12 p.m. Eastern for our next session. We're going to continue that journal that we started backtesting last Thursday. And it's mostly, we got a lot of good data from that journal. And I talked with them, and I said, after they have a new months of data, just like Andy as well, we'll continue it so we can kind of see somebody, maybe go through the stages. But Thursday we'll most likely go through more of the charts. We'll backtest more of the charts, since the last Thursday we backtest mostly a lot of the other data that was collected. So Thursday will most likely be just a lot of the charts backtesting from that journal. And if you want to send in one of your journals, just email me. I'll drop my email in the chat now, and we can probably end up using yours for one of the sessions in the future. So I'm gonna just drop my email now. If you want to email me, it can be now, it can be next week, it can be next month, whenever you have the data available. I just dropped my email. You can send your journal there, and it'll eventually be used like you've seen other people's. So, all right, everyone. Hope you guys all have a great day, and I will see you all Thursday. You gonna say bye? She's still too tired. All right, everyone. Bye.